Alright, boys. Interesting start to the week. So if you were up on Friday in the room, you would have known we were talking um, about the week US CPI. Now that was not so much game changing, but definitely those of us who are looking for weak US data and just resumption of the euro uptrend, that was like a godsend. And so immediately after that data came out, you saw euro break 129. Yeah. Now, in regards to it pushing higher from here, it's definitely possible. Yeah. Now it wasn't just weak CPI; it was weak U.S. retail sales, and the reaction in U.S. yields was fairly immediate. Yeah. Now this is opening the door now for potentially the Fed not raising rates if they don't want to. We have to get confirmation pretty quickly from them if they're going to let the market know ahead of time that they are going to raise rates. Because the reaction in US 10 was, compared to the data miss, wasn't that big, right? The data miss. But it was enough that they got skittish, and the buying on the back of it's been pretty relentless. So the buying of the euro anyway, so selling of the US. Now it didn't break it didn't break 2.3, which is sort of the line in the sand. If this had broken 2.3, then dollar yen probably would have broken back below 113. But it's held so far. But I suspect that we are going to have another test of it, and if it breaks this time on this little sell-off, then that could be enough to get the dollar yen having a bigger correction towards 112, and the euro breaking 110. Now, euro breaking 110 is big news, and that could lead a bit more to momentum traders, a bit more tech traders who are going to sort of hop on the bandwagon, and that could put a little bit more focus maybe on ECB Draghi's speech later in the week. We're speaking in Tel Aviv, but I don't know if that was supposed to be a market-orientated speech. But regardless, if he wants to put a hold on a euro rally, he's the one who can do it by pushing back June expectations of the ECB. The ECB story is starting to get more widely circulated and become more of a theme. Now, I was a little bit cautious here on that previous sort of support here, where the euro found support. I actually took profit off, so I've been buying euro dips. That's where I got out last time after the French elections. I bought again here, out. Still got a little bit running, but nothing much. And I was lucky enough actually to be playing 2 trades on Friday after that weak US CPI. And the other one was a sort of trade that I've been looking to keep an eye on ever since the RBNZ did the number on the Kiwi. It wasn't really a sustainable sort of sell-off, I suspected. The Kiwi was starting to rally on the back of nice data, and so it was in its own little recovery mode. RBNZ came out and said, no, no dairy prices, no inflation, no, GDP, no employment, no. Right, then we got this nice piece of data here, which is the CPI numbers. And sorry, not CPI, retail sales came out here, beat heavily this morning. So those who have been buying dips on the Kiwi, you could use that to keep going. So I've definitely I've been buying a lot of Kiwi and taking profit buying a lot of Kiwi. I've still got a fair bit running now, and I want to keep that going for a little bit because I suspect we can take some of these stops from that high that was into the RBNZ now. I don't think there's any reason to stop going before we get to say 69.80. So that's one of my trades of the week at the moment, actually going long on the Kiwi, looking for that push higher, along with the Euro. I think the Euro's timing is about now that we are going to test 110 at least. I don't know if we're going to break it or not. US dollar's been pretty strong in recent times, but I do like the trade, and I don't, I think it's just a matter of time before the Euro trade becomes a new trend and something we can sink our teeth into, because above 110, the natural resistance is 115. And if you're talking about, where this market's been hiding, between 105 and 115 a few times in the last couple of years, it's natural to suggest that we can get back up there. A little bit downward trend channel stuff up here, but nothing too crazy. If the Euro starts to rally, it's hard for it to stop in this current environment, because yields have only one way to go in Europe over time, and market loves to front run that sort of thing. So I suspect we're going to get it earlier rather than later. But we've been wrong on the Euro before. It's been quite stubborn in that range, hasn't it? And definitely if we get closer to 115, you'll see me talk about caution in this trade. Mainly because the ECB has so much to do with it, and the timing of the ECB, and they won't be in a hurry for it to be coming early, so they could be surprisingly dovish, I think, for the market, just like the RBNZ was for the Kiwi, and that could provide pullbacks, setbacks for this trade. But anything like that would probably just be another buying opportunity if we get high enough. So let's keep an eye on this. If you've been in this, watching me speak about the market for the last couple of weeks, I've gone on and on about this Euro trade, so it shouldn't come as a surprise that this is something I'm really excited about now, that we're getting such bullish price action, bouncing off that 108.50 and looking to the top side. Very hard for it to stop now here, like deadpan. If it did stop here, somehow, right, just randomly, that would be very bearish, because that would be a lower high, like a major lower high, and that would get the market really talking about the 110, 105 range, or at least the 108, 110 range. But that in that scenario, if the market did roll down, don't buy that dip. That dip's dangerous. But right here, this looks good, so give it the benefit of the doubt. As long as it stays above 109, say, we are remaining bullish. If you're not in the market, look for pullbacks now, small pullbacks, towards now the 109.30. They're saying some data came out from Greece. No. Only data that matters in Europe is German data, basically. French data a little bit, but that's the only data that matters. Maybe Italy, maybe. But yeah. Only matter really, that only data you want to watch is, if you're looking at CPI, German CPI of some of the regions actually pushes the market around. So it's compared to CPI of a whole country like Spain or something, just the market doesn't care. So yeah, pull back towards 109.30, 35 would be enough for me to buy. Stop below 109 would be a fairly good risk reward trade in my opinion. In terms of data, it's pretty light week, so you are going to be looking for inspiration, potentially from this speech on Thursday from Draghi. German ZOI, obviously very good. Flash GDP from the Eurozone would be okay too. That's coming out on tomorrow. But we're talking about the Eurozone stuff and US dollar stuff. There's not much. Bit more action in some of the other pairs, Aussie dollar unemployment and UK wage numbers. Also, if you're in this New Zealand trade, while it's not the easiest trade to sort of pick, you have to be sort of suspecting the market was going to test the central bank after they jawboned it to fresh cycle lows. In terms of its downward trend channel, it could have fallen further. I suspect the recovery is now, and this is just a pushback towards that 70 cents for the test there. And with stability and dairy prices. Dairy prices actually coming out on Tuesday night. Timing is always odd on dairy prices. Usually it comes out after the US Open, so probably around midnight Sydney time if you're watching this from Sydney. So yeah, it's a good week. Well, excellent week start if you're looking for the US dollar weakness like myself. I suspected the dollar yen's failure here at the beginning. So dollar yen was actually pretty strong, surprisingly strong almost at the start here of Europe. Had a dip buys came back in, bought, ignored the US sort of yields and ignored the North Korean testing. I look, it is starting to roll over again, and we're now getting another lower high. That could make it harder for these dip buys to regain control. And so if US want to play stocks negative, or if, we see a bit more profit taking coming through on the DAX, and DAX sometimes profit taking comes through because of the strength of the euro. Just pound for pound, if the euro goes up, back in the day it was very important if you're a DAX trader to be watching that, because the DAX would go down if the euro went up. That hasn't been really a force in the market for a while, but it could come back with nothing else to be focused on. Especially if the euro broke 110, you could see that could be given as a reason for profit taking in the DAX, which is at very high levels, all-time highs, retesting fresh all-time highs. So, due for a pullback anyway. Political developments in America aren't getting better; they're getting a little bit more weird, I suppose you'd put it. Markets sort of not immune to Trump, but not sure how to react to some of these things. So you saw the FBI director fired last week, and sort of bizarre series of tweets in the last few days. Now I'm not sure what they're gearing up for, but it could get worse pretty quick, and that would, I suspect, put a shadow on the US dollar via delaying sort of expectations of any sort of Trump tax plan. So Trump plans, if he gets into some sort of quagmire over there, because I don't know, I think the latest I heard was Democrats want to hear the tapes between him and Comey, and he's like, oh, what tapes? The ones he was threatening to release if Comey spoke to the press. And this sort of thing, he really flies off the cuff, and he could talk himself into trouble. And if it becomes a major sort of side issue, that could see it as distracting anyway, and a distraction could further delay tax implementation, which is what a lot of the rally in the US stocks is driven by, and thus the world, risk on, risk off is driven a lot by US stocks. So if they go down, then everything will follow. And we're at very high levels. I mean, in the market, the VIX is at all-time lows. Something's got to give at some point, right? It's unlikely to be as smooth sailing as the VIX is expecting, or as the price action currently is suggesting in the Dow anyway. Looking at the 4-hour here, you see what I'm talking about. That's really, really stable. And so that's 2 weeks price action in 200 pips. Not the same Dow I used to know. So we'll see. We'll see what the next big move is. But I'm prepared. I'm happy if it's risk off, because that's dollar yen down, and in this sort of environment, probably euro up. So I'm happy with that. It won't help the Aussie though, which is enjoying a nice relief rally. Generally when stocks fall, you don't want to be in the commodity pairs, so CAD, Aussie, and New Zealand dollar. But right now the market's focusing on the other big piece of news that came out of Asia, and that was OPEC. There was a sort of a meeting in Beijing, a sideline meeting between Russia and Saudi Arabia, and they came out with an agreement to extend the production cuts until March 2018, and the reaction in oil was immediate. You saw oil jump up. Now that was the reaction here. We've actually extended another 50 cents higher in the European session. 50 is a big level, so 50 is probably going to stop this sort of jawboning level. But technically, we're talking about this, right? How that report came out talking about the technicals of oil after a big bullish reversal candle. That was a 6% reversal candle, and how 4 times out of 4 times out of the last 5 in the last 20 years that have been this big have led to 10 to 20% rallies in the coming 20 days, I believe it was. So it looks like it's one of those, another one for the statistics book. I was surprised that jawboning was so successful at this point, because it seemed to me just a natural reaction to the selling off, and that the underlying, you know, trying to cut supply hadn't been enough to to keep US shale production out. So I thought that it had failed a little bit, but the market's taken the other view, and I wasn't really, positioning on it. I wasn't caring too much about it, but I was surprised that it was so easy for OPEC to talk up the market. I suspect maybe we have reached some sort of equilibrium then. Something to keep in mind if by chance we do get down to 44 or 40 going forward, that there is some support for oil out there. And so, but that means that obviously the main recipient is being Canadian dollar, and Aussie dollar is just rallying in sympathy with Kiwi and CAD, and it's also due for its own little short squeeze at the moment. It's been a while. They're popping above that multi-time support. So, but this sort of rally up here now towards that previous, a lot bigger support from back in the day, could provide a better selling level. 75 would definitely be a better selling level. It's not like iron ore was recovering. It's not like China's really out of the spotlight either. China's still got some issues. Data out of China today was mixed. Industrial production lower, retail sales higher. But the concerns are the credit over there. There's a lot of credit pressures. Alright, so that's the opening rant. Looking for US dollar weakness, picking your target basically at the moment. Pick your pleasure. I'm not really a dollar yen seller at the best of times, without a specific reason to be risk off, but it looks like it can definitely retest 113. 112 obviously is a much nicer level to be buying off if we do get a double day or just a couple of days of pullback here. If we can get down to 112, that would be nicer to be looking to buy into, say, some US data, some US speakers next week, ahead of the Fed next month. Next week? Sorry, not next week, week after. I'm on holiday mode, guys. I'm going away for a week next week. Going to Fiji, so the week after. But it is, this market is providing opportunities. That's good. If you're a trend follower, you might have been chopped out a little bit on some of the pairs. So there was a lot of incentive to be selling the Aussie, and I know a lot of people got caught here. That's just part of the game, yeah. And if we talked about the Aussie a fair few times, don't even touch it. It's not behaving normally. It wasn't selling aggressively. And when the support came in, sell those rallies at your own sort of risk. Not my game. I'd rather be looking at something like the euro. So the euro is a much safer trade than the Kiwi, right? So I should have outlined that in terms of where we are. Kiwi is a bit of a speculative play. Alright, let's have a look at some of the data. I know you guys enjoyed that Brett Connolly stuff I put out last week. I will show you what he's putting out so far over the weekend, so you can have a little look. One second. Too many files. Too many files. I can't find it, sorry guys. Do we need it? One last look, one last look. Alright. Lucky we found it. So I might look at a lot of this. Brett Donnelly is pretty good. It's pretty good indeed. So his first little rant is, you know, something I agree with, but it's not for the debate today. While personally I do not find technical analysis very useful as a forecasting tool, I do find it helpful as risk management and tactics idea implementation tool. Text can help you get into trades and help figure out when you're wrong and early or both. So today I'm going to give you a quick down levels I find interesting in G7. Euro USD. Alright, so the 200-day moving average has provided support so far. That's, you know, also just the gap above the 200-day moving average, remember? Back when the first French election results came out, which is sitting around the 108.50 support now. You can see it didn't even test it really on the pullback. Now we're going back above. And he's talking here about the market's confidence in the ECB normalization story. Yep. I mean, so that, as long as that story remains, euro is going to be strong. It's up to the ECB to delay it or put some cold water on it. You know, expectations are pretty high and getting higher. And as the market rallies, it will get even bigger. Dollar yen. Now we're looking at Ichimoku clouds here. Now you've got to look at these if you are going to be trading dollar yen because so many Japanese look at them. But you can see here, top of the cloud should usually support. So it's 112.80 in the short term. And US Swiss has actually been rallying under my radar. I hadn't been looking at it since the French elections, but it's right back at this 110 level. Now, if it breaks 110, that'd be big news, and definitely can rally, especially if the euro wants to go up, and you know you get a sort of risk-on sort of move higher, where Euro Swiss responds sort of like Euro Yen, but I wouldn't be expecting dollar Swiss to completely underperform in the current market unless we get some risk off. So some risk off come through from stock markets, maybe something from Trump or US stocks. That would let dollar Swiss and euro continue to be tightly connected, therefore making euro Swiss hard to break higher. And if 110 continues to hold, then probably we'll be going back to 108 at least. And his last is his dollar CAD, so he's really bullish on the dollar CAD. Now the backdrop here is that there's a lot of housing problems and oil's getting smashed. Now oil, if it starts to rally, then you know this negates a little bit of this dollar CAD. And if you're looking at dollar CAD today, it is enjoying solid sell-off and potentially breaking the support from this range anyway. So this has probably been negated today because of that move. But in the backdrop here, you got to be careful because the backdrop, especially if we get back down towards 135, the backdrop here is that the Canadian banks have all been downgraded, and there's big home lenders in trouble because of the housing slump that you're seeing in Canada. And that can be pretty hard to stop, right? You can't stop that in a month or two. So that should get worse, not better. And that could be an overhang here for the Canadian dollar going forward. And definitely if you get a dovish bias coming out of Bank of Canada, then that's going to provide support on dips. And the oil rally the onus is on the bulls, not the bears. If it can't get above 50, perhaps it will stall and come back down and make a new range underneath 50. that could be, you know, timing wise with the next leg higher in the dollar CAD. So be very careful with the sell off in dollar CAD and chasing this. And that means that you have to be careful in selling euro CAD, pound CAD as well. Those will look technically good to be selling right now. I haven't even looked at euro CAD for a while, but I can imagine euro CAD and pound CAD looking good. But that's a little bit of if you know the story behind them, it's a little bit dangerous. Nothing too crazy here on the dollar, on the euro CAD hasn't broken, but definitely it's beginning to look a little bit dovish. But let's have a look at the pound CAD. Yeah, so it's starting to look a little bit more. So I don't go chasing this stuff. You know, I might break down a couple hundred points here, but dollar CAD really is likely to find support towards the previous resistance zone, 135, and those stories are real. That caused a lot of this rally. Those stories are real. It's not just oil. So be careful. And when he's bearish dollar CAD, right? When he's bearish CAD, he's saying he's extreme bullish. He's talking about those issues. All right. Let's have a look at dollar CAD by another bank. Trade of the week actually is Deutsche Bank long dollar CAD. I think they're going to get stopped out pretty soon. 135.70 is their stop. A little bit too aggressive. A little bit tight on that stop too. Don't you? I just started appreciating him at RS. I thought everything he said so far has been really nice. Although he was a bit wrong on the Kiwi, wasn't he? Timing wise, he was a bit wrong. He led me into death. He was one of the guys talking up the Kiwi before the RBNZ. Oh God, maybe that when he starts talking about the ECB normalization trade, that's a kiss of death as well. No, RS, no. Jeez, no. Don't want to think about it. I hate when the sort of trades become popular. Right? That turns me off. Or even in the beginning little stages of becoming popular, there's always a bit of shenanigans played. You know. Yeah, we're going to go long. We might go to 108 first. Those shake you out. I thought the shakeout was that the move back towards 108.50 there. But yeah, no, they'll shake out a lot of those with less faith if it goes to 108 now, the euro. Yeah, Toronto housing collapse. Search that on Google if you haven't read into it. But yeah, Deutsche Bank on the same sort of trade here that Donley was talking about. Still saying that CAD remains expensive against oil, hasn't really caught up, but oil's given back a lot of those that sell off in the last week, so I don't know. Perhaps it's not too bad. Bank of Canada is probably the thing which is going to make or break it, right? Alright. Yeah, so I don't want to overwhelm you guys. There was a lot in information in that little update there. Definitely don't go getting too bullish here on the Aussie. It's notorious for just having a short squeeze and then failing and going sideways. You know, it's actually just not good to trade. Just don't trade it. I think you're okay to be bullish on the euro here. We'll see what happens at 110. And we'll be keeping an eye later on. There's a bit of Eurozone data tomorrow, but really I think there's not much out there on the radar to stop it, so it's a good week for technical moves. Good week for market to test supports. If you're talking about dollar yen, good week for the euro to test resistance. We're talking about 110. And you know, if we do get something which can start to prompt that pullback in the US stocks, that's really, I think, where we're going to see some bigger moves. But so far, you know, we haven't got too much there. So don't get too crazy here chasing. Alright guys, good luck with your trades. We'll be back on tomorrow at the same time. We'll check in, see how everything's looking up. It's got the makings of a very good sort of week here. You've got a lot happening, a lot of opportunities on the cards, whether you're bullish or bearish on a lot of these pairs. You're going to have an opportunity to express your view.